Today's date is 2/9/2014, 11:53 a.m. Pacific Standard Time. We are gathered here today to look at the Dow. And why was the Dow extremely overbought and had to have a correction? And why is 2014 much different than 2013? Okay? So we have generated a sell signal in the Dow. And short term down here, we have made a low. We are short term oversold in the Dow. But then again, we were overbought going into January. And there had to be a washout down here to the support level. 3 days we've gone up higher. This indicator down here is a public one that the public looks at. Basically, that signaled the big money players that were on the sideline to come in and buy down here. And that is how you establish a low along with your fear indicators. Okay? So fear is at its highest level. As we broke higher, those fear indicators broke down. And they're in the other video. When we got to a level that we have not seen in quite some time is that on the percent DS or percent K, that there was oversold at 8.66. Yes, it was not, and let me point it out, when we were up here at the highs, that daily percent was 91.48. And we told everyone how January was going to happen. And not only that, when we stayed elevated up here in that percent DS, once it started to drop at about 54% here, it went straight down and got easily down here to 8.8. And now we've had a rally. We are back above the 200-day simple moving average on the Dow. And that moving average on there right now on the 200-day simple is exactly 15,488. And we're back above it. The 100-day into resistance is at exactly where it should be, and that's 15,799 on the Dow, and that's this line. That's a 100-day moving average resistance. Now, everyone that was on the sideline that wanted to get a chance to get in, they could down here at that bottom. However, one needs to be very careful because, as I have clearly stated, that 2014 is going to be a very volatile market for the bull and the bear. And at times you want to sell, and at times you're going to want to buy. That means it's not a one-way directional movement like it was in 2013. The market did not hit a complete 10% pullback that hasn't happened in like 420 some days. Listen, you get your first pullback, you get your first bounce. Just like breaking down, we're going to have to get above this trend line right here where it broke down on this consolidation and started with the lower low, lower high right here. So on the way up, that's going to be resistance levels. Just remember one thing. The 50-day simple moving average will be a wall of resistance at 1601 right up here. Along with the red line, that's the 20 simple day moving average. And that too is at a low, the 20-day, and that too is slightly right there at 16,000 on these moving averages. And so all the daily moving averages were violated in technical terms in the technical world. However, we are more of a market maker. And what do? We take advantage of an oversold market. We take advantage of an oversold market like we're doing now. And an overbought market. Yes, you heard what I had to say. So nonetheless, the Dow is at its all-time lows for this February move. So we have a counter trend going to go back up. We are in the earnings season. Let us not forget. And we've had a couple of weeks of earnings that have come out. Just remember that the Dow is 30 stocks. Okay, so they did their selling there in those 30 stocks. The leadership in those stocks will be the first one to move this index up to resistance level. That's going to be phase one, right above the 1600 level. Then we're going to get up to this upper trend line. And then ultimately, we got these other trend lines, 1, 2, 3, 4, to get back up here and make another high. Basically, here's a half bar trend line right here, as you can see. So, once again, I really want the clarity for my MMTs. This is the half bar over here. This was a 5-day consolidation breakdown. We broke it. They bought up the bottom here, and then they had a 2-day breakout. Once again, it's favorable for the bull because it's up above the 200-day simple moving average. The 10-day and the 100-day are currently what? At resistance. That's right here, so you can see it. Basically, bottom up, 2 days up to start the month of February. Once again, as I have said clearly, you are going to have a lot of volatility in 2014. And it's not going to be like 2013. We told everybody that before the year started. And starting in an overbought market in a January is something we haven't seen in a long, long time. And not only that, the January effect, so goes a year. However, we know that if we break above these moving averages and they become support, then the market is consolidating its first moving average consolidation. It would be. And right now we're above the 10 and we're smack into the 100-day. The 20 is way up here. So is the 50 and the 40-day simple moving averages. Once again, it's our pleasure. Hey, you got to know where the markets were. You got to know why they pulled back. You have to understand why 2014 is going to have extreme price volatility, both for the bull and the bear. And do you know how to get involved? If you don't know, here's what you can do. What you can do is you can go to trading. You can go to free trial and then open an account. When you click on the open account page, it's going to bring you to everything you need. You take responsibility and you look at the video and you click on open an account and you get started today. And you, if you have the pattern day trading rule with counts below 25,000, you will not have that challenge, and watch the video. Go through the content. I will get your paperwork. Once I do, then we will get you set up. And yes, you will get trading capital from us. That is what you get. So basically, all the analysis like we're doing now and during live market hours, it's all right here. And you know how accurate we are. And then now you can look at the market in a little bit different terms. And if you really want to get good at this, then we will see you here. Once again, the Dow has put in a short-term bottom with the 2-day up rally in the first part of February, which is a counter trend to the January selling that these markets have not seen from an overbought process. Yes, and 2014, once again, is going to be extremely volatile. Volatility works both ways. It works for the bear, it works for the bull, and it works for your entries and exits.